Paul Morrow. Welcome back to the channel. Let's rip the Band-Aid off for grandchildren. If you have little people in your family that you like and you want them to get your IRA money, I have something important to talk to you about. We put money into these retirement funds over our lifetime, and we thought it was the greatest deal in the world because we didn't pay any income tax while the money was accumulating. If you think that putting this money into your trust is going to save you a nickel, every lawyer in the world, every one of our trust planners in the world will tell you, actually, if you put your IRA into trust, it will cost the kids money, not save the kids money. If you happen to be a retiree, let's say you're 75 years old, and like a lot of retirees, you want to just take that 4% rule, you don't want to take any more money out, and you want this principle to go to your grandchildren. Number one, there is no capital gain on leaving your IRA to your grandchildren. Whatever you made on your stocks and bonds, IRAs convert capital gains to ordinary income. Number two, there is no more lifetime stretch out of taxes. Actually, depending on whether you leave the money to them individually or in trust, that money's got to come out between 5 and 10 years added on to their income. Now, if you happen to have successful kids, and let's say that this is your granddaughter and she is very successful, and you're going to add $1 million onto top of her income, she's going to be in a maximum tax bracket. I mean, we actually have in New England some states where you have state, federal, and city tax. First thing you need to know is they're going to pay about $400,000 in state and federal income tax. So that leaves them a net of like about $600,000 that they're going to get out of your money. Then, if you happen to be in a state that has either state inheritance tax or state death tax, the gross amount is added in to your estate. If you happen to be a successful person and you've got your vacation house in the mountains or on Cape Cod, you've got your retirement fund and all that, they're going to lose about 10% of this to state death tax, which is another $100,000, which brings them down to basically $500,000 of inherited money. 50% of the money that you have in your retirement fund will be chopped off the top on its way to your kids. If you happen to have a beautiful, smart granddaughter and she happens to marry a guy who's sleeping on the couch, drinking a beer, watching a big screen TV full of football, and you don't want your money to go to that guy, you need to pay attention to how to properly put IRA assets into a Roth with a protective, divorce-proof trust so that your money at least goes to her and not to your beer-drinking daughter's husband. If you have grandparents with money, this is the time to talk to them and say, probably you should do some planning because of the changes in the new tax bill that was just passed. All the planning we did 20 years ago goes into the trash. Let's modernize our plans and let's get your money to your grandchildren. Getting more of your dollars to your grandchildren and not to the tax people or not to the in-laws is just part of the art of being smart.